Hello, everyone. Welcome back to the rationalinvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Broiler Chicken Show. We got about 15, 20 people here. Not really that many people. Middle of the summer, pretty quiet. There is an echo. So here we go. Already starting off on a horrible note. Here we go. PM says, no, sorry, that's me. All right. Anyway. Probably a pretty light crowd here this week. I mean, crypto itself is pretty quiet. Didn't see too much activity. In fact, I actually kind of took yesterday off, gave myself a bit of a break from the computer and all that. I actually came back and saw that the market is firming up here a bit. Suppose there are a bunch of things that are pushing price around here of late, so we should probably talk a little bit about that. We can take the opportunity, I suppose, to do like an AMA kind of idea. So if you do have questions, I think our school term is out right now. So student questions are probably pretty light. I don't know, Chris, did you have an opportunity to look at the AMA document? Was there anything even posted there? I doubt it. Yeah, let's throw that AMA document in the lounge. Let's see how to do that. And if you are a site member, feel free to post a question to that page. Jesus, I see there's a lot of people posting fairly lengthy messages. We'll try our best. Do you want me to post the AMA document, Chris, or do you got that? I suppose I can put it in here. Let's see where we are. There it is there. You send. Okay. So if you do have a question, feel free to ask. Now, having said that, I probably don't have the answer. I'll tell you what I think, but who knows if that's right or wrong. And especially with regard to crypto. I'm probably not the best technical expert on any of this stuff, but I'll give you my thoughts with regard to price action and trade plans and things like that. So anyway, one thing I did like recently is we've sort of embarked upon trying to sort of condense what I guess I've seen. I mean, Chris has been helping me, but I think to all intents and purposes, it's just sort of my bent on the market. Over this past week, we put together this cute little one pager sort of market summary. So here we are, August 6th, and I wouldn't mind just basically spending, probably the first half just walking through what we see on this document, see if it makes any sense. We'll give you sort of a quick glimpse at the breadth indicator here in this weekend document. And interestingly enough, you can see the crypto breadth actually did flash a sell, and I liquidated the position. Then, like I said, I took yesterday off. I came back first thing this morning, noticed that the market had flipped back to the bull side, so I have to get back into that trade. And of course, one of our topics of conversation, I think, is around this tether thing. And as a result of the tether sort of nonsense, price is getting bid up a little bit. I think it's because tether itself is less worth. It's falling. I suppose maybe, Chris, while we're chatting away here, if you could, I don't know whether you have those kind of tether screens. I used to do valuation of Tether across different exchanges so you could see what the value of it was, relatively speaking. But if I understand correctly, Tether FUD, and it would make sense because the impression that I get is that the how do you describe this? It's hard to describe. It's like in the write up that I did for the Bitcoin, I even said here that they always say it's dangerous to short a dull market. And it's weird. It's sort of like there's a whole bunch of little sort of chippy things that they're doing. No real sort of outright scandal, just lots of rumors. I suppose this is where the FUD term comes from, fear, uncertainty, and doubt. And then, because Bitcoin is now sort of mainstream, all it takes is one of these jerks, that controls $1 billion hedge fund this or, pension fund that, just to say something, and all of a sudden the price just takes off like a rocket. So this is a dangerous market to be shorting. The irony of it all is that the broader stock market actually just looks like poop right now. And I suppose we could talk a little bit about that as well. So in a sort of dull, dangerous market, Bitcoin isn't nearly, like we look at the Apples and all those up at ridiculously high levels. If that was the case on Bitcoin, I'd be screaming, buy some puts or, at least hedge a little bit or do something to cover your ass. But Bitcoin's kind of like middle of the road. It's not really against the top end of the range. It's not really against the bottom end of the range. It's just sort of hovering around the middle of the range. And so calling direction right here is usually very, very difficult. And what often happens with algorithms when we get into this kind of market state, and I see this happening, and it scares me a little bit for all the sort of new people that have joined the site and just said, oh, this algo, I'm just going to trade that, whatever. Say, quite often what happens with algos is that when you're in a trending market state, algos make money like crazy. You get a signal, market moves, it trends, and you see huge percentage increases or decreases, and of course the algo signal works nicely. When you're in a trading range environment, algos can get torn up. And I'm seeing a bit of that right now in our little BTC algo. It's not really like it's losing a lot of money. It's almost like it's death by 1,000 cuts. And that's what often happens trading algorithms. So I don't know whether people are aware of that. In fact, in the level 1 program, we teach why it's not really the best idea just to take every single MACD signal that you get, because we used to call it you were working for the broker. But anyway, last year I embarked on this trading plan to specifically outline the algo signals and how it would do versus just buying and holding Bitcoin or trying to manually trade Bitcoin. So as long as that plan is up and running, I'm just going to continue following that plan. I would have a major word of caution to any new people to trading coming in and just thinking, hey, I'll just take these algo signals and this is easy money. Yeah, this is all hard work, folks. No doubt about it. All hard work. And in these kind of market states, we might have 20 trades here, and really the Bitcoin price doesn't really go anywhere. Working for the broker. Anyway, so that's sort of the situation here from the breadth signal. If anything, we had one gentleman on the site who I really liked. His approach was that I'm not going to really take an algo signal unless I see both the S&P and the crypto top 30 pointing in the same direction. And we got a pretty nasty fail signal in the broader stock market, middle to the end of July. And if anything, this is a really, really good example of the concept of divergence, where the major indexes kept pressing to new highs, but the breadth of the indicator started to break down, and the broader market, sort of the number of issues advancing versus declining, started to tip over. And this has been working its way lower for a while now. So in the face of that, I don't really expect a huge move higher in Bitcoin. What I do expect, of course, and this is the screwy world we live in. Oh, what a surprise. Tomorrow's another one of these Hallmark holidays that they've just spat up out of nowhere. And I mean, it is what it is. As one gentleman who's in the hangout with me would go, Brian, quit complaining about it and just deal with the situation. But, we have another sort of non-business day tomorrow. And of course, the 1%, they love to fuck around with price, whether it be international futures markets, whether it be currency exchanges, whether it be cryptocurrency trading. On these holiday sessions, you get really screwy price action. So I have a feeling a good portion of that is all around this new. All of a sudden, did you know the 14th of or the 7th of August is now another holiday? I never knew that in the past. And it's so frustrating how, when I suppose when I was a working schlub and I was punching a clock, then yeah, that's great. Oh, it's so awesome, all these holidays. But when you're a small business owner operator and when you're a market participant, you're in the market wanting to trade things like futures contracts and stuff. These holiday sessions are just making our life a pain in the ass because, if you want to write something down, hey, I just learned this from this guy, Beamish, I can guarantee you through these holiday sessions, you get some absolute brutal market manipulation by the 1%. They have basically carte blanche to push price around because it's so illiquid. And if they can run stops, especially on something like crypto that's completely unregulated and is open playground for that, the SBF guy and the poker game. And now he used to run a poker company and he used to give people software that would let them see other players' cards and not even think twice about it. And these are the people that are running crypto. So do you think that kind of, criminal behavior is in crypto? Absolutely. And from what I understand, SBF now is basically going to get off scot-free. And I mean, it's like the criminals have just completely taken over our society. And I suppose there's probably other people that say, hey, Brian, the criminals have been in charge the whole damn time. Wake up, open your eyes, and see what reality is. There goes Beamish off on another rant. Anyway, so broader market message. Maybe we'll even talk a little bit about some of the market darlings that seem to be falling apart here. It's not a very happy market. And actually, what's interesting about the broader stock market is there's been a number of sort of market pundits and stuff that have said that this August was going to be a bit of a tough window. I know guys that I like to follow, Larry Williams. He put out a video recently that we've been sharing on the site that, and I think it's on YouTube and stuff, saying that he was kind of looking for a bit of a soft market there through August. And I think the NASDAQ seasonality actually turns up about the middle or to the end of August. So I think he was looking for the beginning of part of August to be weak. And sure enough, we got this Apple disaster in front of us here. As well, there was another gentleman who seems to be pretty popular, Fundstrat, Tom Lee, I think his name is. He seems to be quite popular on the business channels and stuff, although he was completely wrong about that Bitcoin top there a year or so ago. But oh well, people seem to forget about that kind of stuff pretty quickly. I suppose Michael Saylor's now starting to get back in the four, although I saw that his stock got pretty beat up there recently as well. But anyway, Fundstrat guy, he was saying that he figured that August was going to be a bit of a soft period as well. I suppose the one thing I would sort of caution, and actually, one of our site OGs actually has been doing a ton of work on getting sort of the new website up and running, although extremely frustrating and a complete waste of time as far as I'm concerned. These damn websites, total waste of time and money. Anyway, um, anyway, that's Brian just bitching. Thank you, team. You're so awesome. You're the best. Blah blah. But one thing I was very proud of is we got this blog. This isn't part of the new website. This is something that I've been asking for a long time, and we have a gentleman who's updating it fairly regularly now. And also two other people on the site were even posting it out. Um, we got to be a little bit concerned about January barometer kind of readings. About I guess about halfway through the year, mid 3/4 of the way through the year, we're supposed to see a pretty precipitous kind of fall off in price. And actually, like I said, another gentleman on the site, he also was tweeting it out, and I think I retweeted. Well, maybe I just tweeted out an image of his. Oh, the problem is I never know where the hell these damn pages are. I guess we'll go over here, go here, and then go here. I don't know whether it was over here. Where did we put it? Here. I think this was like I don't know whether this was Eddie's picture or Josh's, but you can kind of see how the market was looking for a substantial rally, and indeed we got that. Had huge outside upside key reversals in the Nasdaq back there in the winter. I talked about it being sort of the trade of the year, and I think to all intents and purposes it was. And then as we sort of get into the meat and potatoes of the year, there should be a pretty healthy pullback here. Is this the beginnings of it? I don't know. Maybe yes, maybe no. Like that breadth indicator started to break down over here. So all of this move up here, I think, was actually fluff. You can see how the January barometer actually was looking for a double top here. So this kind of moved to new highs really, I suppose it was probably on the both the inflation data coming in a little bit softer than expected. The Fed maybe doesn't need to be as aggressive on interest rate increases as maybe the market was anticipating earlier. I don't know. But interesting anecdotal evidence. This is a chart pattern that I've come to just swear by over the years. Where's the best place to show you? Where is the best place to show you? We'll do it over here. Well, maybe I'll just do a brand new one. Well, I mean, I have this on another chart. We could talk about that in a bit. Actually, I don't think I even put. I was thinking about putting this tweet out, but I just posted it in the room in TRI's sort of chat room or basic chat lounge. Although, man, that's becoming difficult now. I would like to just post everything in the lounge, but because a lot of the proprietary signals and stuff conflict, and this is a business now, so we got to make sure that we don't cannibalize our business. I refrain from posting a lot of sort of signals that the system's going to spit up in the lounge. Anyway, this is the QQQs. You can see the little double top breakdown up there. You want nice simple rule of thumb, and this is if we look at the weekly chart, there a key reversal signal I just was talking about a minute ago, the trade of the year right there. I gotta say, that was the level. And there was the bull market of the first half of 2023, and nobody was calling for that. In fact, most people in the public were actually calling for a recession, right? You just kept hearing people in the public, recession, recession, recession. And man, they could not have been any more wrong. So, what a great analogy. Don't listen to the public, and certainly don't listen to the media. They're always wrong. Anyway, so there's our situation now. But the one thing I wanted to show you, if you can remember this image right here, and wow, what a signal that was. Well, look at what we had happen the other day on the S&P 500. This isn't a key reversal because the market didn't open above this wick up top here. And I even heard another person the other day. I couldn't believe it. They actually called this candle on social media, and I'm stunned that they do this. I mean, who's teaching this stuff? Somebody actually called this candle right up here. You see that on my screen up there. They actually called that, well, that's an inverted hammer. It's just like, oh, come on. Anyway, but Brian barking at windmills. And the guy has 10 million subscribers and likes and makes a gazillion dollars off of Google ad revenue. So who gives a fuck? And now you'll probably find that, oh, well, we're actually going to call them from now on. That is an inverted hammer. We're like, what? Anyway, this in Japanese candlestick land actually is a valid engulfing bar because the body engulfs the previous body. But what I would just simply say is, wow, look at that image there. What the heck is this thing just staring at us in the face? Kaboom. So just as we had the bullish trade of the year on a bullish engulfing bar out of the NASDAQ and the QQQs, wow, that is a very nasty sell signal there on the S&P 500. And also, too, notice, for all the students who've taken the education program, who's driving the bus here? Look how the bullish volume bars, this is a direct application of what we teach you in the education program. And I don't see anybody teaching this anywhere on the interneting. So hopefully what has to happen is I have to die. And then after I'm dead, then all of a sudden the world wakes up to these concepts and you hear people talking about this stuff. But while I'm still alive, nobody's going to talk about it. It drives you crazy. I mean, I don't understand why more people don't pick up on this. But, in essence, these green bars, this is buying pressure. And you can see, like here, for example, there was a hell of a lot of buying pressure and the price of the assets going parabolic. Then all of a sudden you see the bears. Wow, that's a bunch of selling pressure up there. And things sort of backed off, right? And where the hell did the bulls go? They disappeared, and so price backed off. Notice, this is 110, this is 104. And then look how the buyers are just disappearing here. So this is 80, this is 80, this is 80. And then do we get a volume bar? Looks like we got one here. So there to there, if we get an up volume bar lower than this 32 million, keep in mind tomorrow is one of these quasi holidays and it's an up day. Oh boy, that's a very, very bearish sign. But that's talking about the bulls. And really what that's simply saying is the bulls are falling asleep and they're losing interest. And frankly speaking, remember we said our big buy signal was over here. And in fact, the interesting image, check this out. You could actually make the argument on the daily S&P 500 chart that there is your bottom. What kind of candle is that? I don't know whether you can see that or not, but this is take a screenshot of that, folks. I mean, it's just as plain as day. That's an outside upside key reversal. That is a kick-ass buy signal right there. I mean, just absolutely kick-ass. Doesn't get any easier than that. And I mean, more importantly, you just look at price and go, well, was that a good signal? And you tell me. I mean, look at the damn market just streaming straight up. And then all of a sudden, oh, look at that. Now we finally get an outside downside key reversal. So is that the bottom of the market and that's the top of the market? That's what I think. And interestingly enough, you can kind of see, it looks to me like the market spent a heck of a lot of time sort of in this area. So that's probably where if you were going to use things like fair value and what sort of the average, what would be the POC, what would be this sort of average level that people are long. My hunch is the POC's probably sitting somewhere right in there. Let's go with this one. Oh, hello. Look at that. So, usually what ends up happening is, we've definitely established a trading range. And ideally, this profile wants to, at the end of all of this, it wants to look like a parabola, where basically price has discovered all of this. And really, that the market's ready to move into a new range when the profile actually starts to look like a rectangle. Because all of this has been discovered, and we sort of come to the general agreement that the market has fully discovered this range and is ready to either move higher or lower. So you can clearly see they've got a POC here, and everything else is empty on both sides of this profile. We could spend, we could spend the next 6 months filling this profile in here easily. So what I was just going to simply say is, what's a 50% rule of this range? Boobity boo to boobity boo, and good old 50% rule, WD GAN. Oh, what a surprise. Look how close to the POC that 50% rules. Where's the 200 period moving average? That's usually sort of like, an average of, where the market's been over the past year. So, if I was thinking like confluence of levels, where would I like to actually see the market pull back and ask itself whether this thing's really a bottom? In our education program, of course, we talk lots about value high. And of course, we talk about first stop target. Where should you expect markets to pull back on any given point in time? Just a natural, healthy thing for markets to do. Good old 38.2. First stop target, Ray Burchett. And notice that would just be a Wyckoff check of all of these highs, right? Right in there and there. Also, too, we talked to you guys lots. We can even do up a Wyckoff reference. So there's Mr. Wyckoff. There he is right there. There's the top of value. There's 38.2, 50%, 200 period moving average, the POC. I'd say there's probably pretty good odds that we have to work our way back down into sort of this 420, 425 area. And here we are sitting 446 right now. What does that actually mean in real terms? Well, that's about a 20, 30 point drop, or, let's call it 7 or 8% correction. It's not huge numbers. And off of the actual top, this is going to just simply represent, let's say we bottomed at the POC, about a 10% correction in price. That seems pretty normal. If anything, our trade setup process, we might say something like, what was a realistic push higher here? So good way to do that is things like chaos levels. So there's 2.618 off of this huge bottom. I'd also, I would just simply ask through these. Okay, well, where's the 2.618 off of that? It's still a bit higher. What's a 2.618 off of this? It looks like the market was respecting that. I hate to say it, but we might find that there still needs to be one more push higher here, especially like into the fall. That wouldn't surprise me. If we put that guy there, let me go like that there. Yeah, Jesus. So I wouldn't be surprised, folks, if we get our pullback, fill in gap, maybe test the top of value, then work up, I got, it looks to me like there's plenty of reasons to think that this market could still go higher. So maybe it's something that looks something like that. Wouldn't surprise me. And it might even be interesting to do like say like market symmetry off of where are we here? Bar pattern. Maybe we'll go say something like that. I wouldn't be surprised if it looks something along those lines like that. And we actually just, bump our way higher here through the sort of the next few months. Don't really think we're going to see a crash scenario. I think this is just something along the lines of the market just got a little too far, a little too fast, a little too much ahead of itself. And we just need to come back and clean up things like 38.2s, top of value, 200 SMAs, fill gaps in, et cetera, et cetera, et cetera. So what is fascinating is to see how those outside downside key reversals and outside upside key reversals seem to be dictating right now. And actually interesting, the key reversal itself, theoretically, we're building some algos, and these algos should be trading for us. And I'd like to see this up and running for this November sales window. Really. So knee-jerk reaction, what I usually like to suggest is take the key reversal, maybe of like a 1.5 to 1 risk reward on the initial sort of trade. Take half of the position off at 1.5, maybe move your stop to scratch, or maybe even just leave the rest of the trade on for that key reversal bar. And then on any sort of next subsequent buy signal, you actually take the rest of the position off. And if you're lucky, maybe we get a dump right back down into the pocket, into these support levels here, and you ring the register big time. So, and actually it was interesting because our options, we have a level 4 program now that Zach is teaching option spread trades. And I don't know whether I have it on here, but the option spread trade, let's see if I can find that for you. Yeah, there's the big honkin' reversal. Interesting weekly price chart there. But we had a spread idea. Let's see if we still have it. Damn it, I don't have it. Shit. So let's see, maybe in our secret options formula group room we have it. We were talking about value stocks yesterday. I actually did a really good analysis of a value stock yesterday. It was kind of fun. Maybe we can talk about that in a minute. I don't see it anywhere. Is this it? No. Anyway, we did have a spread trade, but the problem is if I don't have it here, I kind of look like an idiot blabbing away. Heather, do we have any of our spread traders on the call here today? None of them are here. That's kind of a bitch. Yeah. All right. Well, I'll just have to leave that. If any of our spread traders do pop up, if you could remind me what that S&P 500 symbol was that we're looking at. I think it was SPDS or something like that. It was an interesting proxy on the S&P 500. But it was a cheaper proxy. Adam, what was the was it the SP? Which one was it? Can you remember? Was it SPLG? Maybe this is it. Yeah, I think that's the price. Anyway, really interesting. And the cool part about this was that, but it doesn't look like this was the write up. But we did really cool spread analysis, and we had the strikes and everything all laid out. Anyway, I'm wasting time here. Sorry. So, what am I trying to say here? U.S. stock market looks heavy, and as we had pointed out in the newsletter, wherever the hell that is. Damn it. I'm not having a very good day here today, folks. My apologies. I don't have my head on straight. I don't know what the hell I've done with the newsletter now. I thought I had it over here. Dashboard. No. Here. No. This was the stock actually is a fund value stock. We were picking apart. Damn it. Oh, this is so frustrating when I have days like this. All right, there we go. Finally found the newsletter again. Yay. Okay, summer doldrums. Crypto is oscillating a lot right now. Lots of FUD going around the space. As we pointed out in the newsletter, Chris had actually, he's probably even smarter at this than I am explaining what happened here. Maybe Chris, are you with me here? Maybe it would be better that you explain what the hell happened here on this curve finance, because I don't really understand the story. I think we have a news link in here specifically, and this is one reason why I really like this newsletter is we include the links of things that we think are relevant here. Do you want to take a minute and explain this to these people, Chris?
I'm like briefly familiar with it because I wasn't really affected by the hack, but it was big news about a week ago when kind of a lot of the crypto DeFi names kind of came off in price. This curve hack or curve exploit where like 60 million in funds was kind of lost, and I think there was some bailouts of some pretty big whales, but I believe this article kind of goes into it, and I'm not sure if it's over or if it's kind of still ongoing. I don't think it's over. I think lots of questions have been raised. But yeah, that was kind of the gist, in my opinion, of kind of what happened there with some of those crypto names coming off last week. Was this curve slash Viper coding language exploit that was it was called a re-entry attack. That's what it was called. It was called a re-entry attack.
Mhm. All right. So what I would, and the question ultimately is guys like Fink actually behind this? It wouldn't surprise me. If he wants to advocate that regulators need to make it illegal for anybody other than him and the 1% that they deem the people who are going to run this show, I would not put it past those kind of people. This world is fucking evil. It's ridiculous how bad this world is. Think of SBF and the poker guy, right? I got to remember that guy's name because we should say his name every single day so we don't forget how evil these people are. So just understand that this might actually have been intentional by the 1% to further advocate that they need to quote unquote protect the public, which is regulation built up to protect the 1%'s monopoly. So just understand this shit is going on as we speak in this space. Then, of course, we also have Friedman. Yes, thank you, Adam. Should staple that across my forehead. All hate Dan Friedman and corrupt, criminal, evil crooks of our society. All right, anyway, blah, blah, blah. So understand that that's going on. So that doesn't help the bull case at all. SEC, of course, Mr. Gensler, I think, if you kind of think of with the way the university systems work, I mean, one of the reasons why I did not do well in the university system is you basically had to kiss these university professors' asses. And regardless of whether you agreed with them or not, you had to do exactly what they said or they will fail you. And I get the impression Mr. Gensler, keep in mind, he was all MIT professor, and all the students have to literally kiss his ass to do anything in that kind of environment. I get the impression that he's basically carried that same attitude over to this U.S. regulatory kind of authority body. Um, say what you will about Mr. Hart. He is a character, and it's interesting that I actually asked Chris to do the write up of this part of the newsletter while I was working away on my Bitcoin analysis. And he wrote, and this is gorgeous, right? Meanwhile, everyone's favorite eccentric crypto, and actually, I think what was the word they used? Like developer, I think. I don't know, something like that. Anyway, I asked him to change the word to promoter. But anyway, I thought that was funny. Everyone's favorite eccentric crypto, yada yada. Richard Hart is being sued by the SEC. And I have to say, point blank, I kind of agree with the authorities on some regard to this because Mr. Hart was going out and treating himself very, very well at basically the expense of purchasers' money. And then to only watch as the price just absolutely collapses on the other side of these events. He understands how the game works pretty well. And he took full advantage of it. So it doesn't surprise me that he eventually has run into trouble with regulators. But it is interesting to see this dance between sort of the 1%, the higher ups, the university professor kind of class, which is, I think, who's kind of dominating the this conversation right now in this space versus sort of the outright entrepreneurial sort of boots on the ground kind of people like Mr. Hart, Mr. CZ over there in Asia and stuff. Um, I'm not necessarily saying I agree with Mr. Hart's approach, but it is what it is. The point here is that he's basically at war now with Mr. Gensler. I have no idea how this is all going to play out. What I would say is I am sure, half of the reason why kind of the SEC's backed off of things like Coinbase and probably also CZ to a certain degree is that this now ultimately turns into who has a bigger pocketbook to hire the biggest, fattest lawyers. So the lawyers are just getting absolutely rich off of this. What a surprise. Business as usual in our society. And I would imagine Mr. Hart's going to be pretty pissed off at how much money he has to throw at lawyers to basically spend the next year or two in court fighting Mr. Gensler. Anyway, this doesn't help the backdrop of our summer fun, silly season in crypto. I can understand why, like when I looked at Bitcoin price and when I looked at sort of the price action in the market across the board, didn't really see a hell of a lot to get excited about through the weekend. And I can kind of understand with this kind of backdrop, it's tough to really get the market rolling. If anything, the one part of the market that I think is doing okay is sort of that meme kind of environment where it's not really being driven off of fundamentals. It's just a whole bunch of kids are sitting around there in mom's basement. They've got nothing to do and they're just looking for something that's got some momentum behind it. I know, let's bid up Shiba Inu, whatever the hell that damn thing's called, and come in you and all that. Which I am long that come in you, so I don't mind. You want to bid up the meme coins? Oh, fine. I guess I'll take your money from you. But other than that, I'm not seeing a hell of a lot of sort of like, hey, this is a broad-based bull market. Maybe that changes. I don't know. And then finally, and I thought this was sort of the major kick in the nuts, we haven't had a lot of we haven't had a lot of talk about Tether in a while. And it's kind of interesting when everything goes quiet and people are distracted by seasonality and stuff like that. You never hear about these stable coin, FUD, and is this thing going to go under? But all of a sudden, now that Bitcoin has done its seasonal rally, we've done, buy when it snows, sell when it goes. Mr. Big Shot Larry Fink's trying to like prime the pump with a Bitcoin ETF kind of talk down in the States, which I think has created some really wonky price action, which opens the door for a lot of market manipulation. Hey, let's get the Tether FUD train going. And if I understand this, Huobi exchange, which ironically enough used to sort of be the original exchange that if you wanted to do wash trading, if you wanted to do some really unscrupulous, really, kind of, gray line, legal, not legal, ethical, not ethical activity, you go over to Huobi. In fact, I remember site members years gone by, they would always joke about how crooked Huobi is. So it's interesting how all of a sudden, out of nowhere, here comes a whole bunch of talk about maybe Huobi is going to go under. And of course, well, how can they drag Tether into all that kind of conversation? Which again, it's not going to really set the backdrop for a lot of bullish enthusiasm. So, oh boy, what a mixed message here in crypto right now. Mixed message in crypto. And the broader stock market is not happy with things like what Apple just came out with. I suppose we could take a moment. Like I said, I did talk to you a little bit about things like the S&P 500. So hopefully you understand sort of the backdrop of where we are in sort of big cycles. There's our S&P 500. We did have pretty substantial bullish reversals there last October. Huge rallies. If anything, I'm a big fan of continuation patterns. So I would look at this move here, A to B. I would look at as actually that's the first part of the move. And these things always move in like 2 or 3 steps. So the second part of the move is our bullish bot kind of thinking. So that is, you guys are all familiar with, if I go A to B, nice and big, and then C to D, right? And this is this thing trend continuation. The only problem is we got a little too far. And it's interesting how, remember I'd said the algo, right? TRI's breadth indicator was actually showing signs at the beginning of July. And it's funny because what a coincidence, right at this moment, our algo and the code and all the data vending and all that went screwy. So the information was all messed up there for a bit. So you have to go through and recalculate everything. And sure enough, yeah, that's a pretty good looking top. That all happened around the first week of July. And then remember I had said, so this would have been your bullish objective right into that 450 area. And then notice, look at that, July. So there's the beginning of July. The breadth indicators all start topping out, and the broader market's not really that happy anymore. We had like another week or two of extension, and then all of a sudden now the market starts cleaning itself up. So this is a really good example. I don't know whether you're aware of this, anybody in the public watching this video. Maybe you can learn something from this. Take this as a screenshot. This is actually what's called a PRZ, or potential reversal zone, this 450 area. So when we get up into this area, you should be looking at this price chart and going, oh boy, this got nosebleed written all over it. You heard me talk earlier about where should the market correct to. POC, 38.2, 50%, 200 SMA, top of value, fill in these price gaps, outside, downside, key reversals. So really, this is business as usual. I don't see anything out of the ordinary here. And it's kind of interesting that at the same time as we come into this big technical objective, right? We should even write on here PRZ, right? And take a screenshot of this, right? I do these free videos to try and give you the opportunity to learn on your own, right? That is a very good learning opportunity for you there. Take a screenshot of that. And then, how does the trade cadence usually go? Let's see if you guys over on YouTube, there's 40, 50 of you watching. All right, somebody help me here. How many reasons should we have for justifying taking a trade? Anyway, oh, Eddie gave up on me. uh, 3 reasons, that's good. What's usually the first reason that we want to consider? Nice job. Yeah, I've got a few people jumping through hoops. Some people are probably watching this for the first time going, oh, this guy makes you work while you watch these videos? God, what a pain in the butt. Location, very good. Who said that? Constantine. Right, just think of real estate, right? Nice, easy way to remember. What are the 3 words in real estate? All right, what's reason number 2? Anybody remember what reason number 2 might be? We want to somehow, reason number 1, we said is we ideally want to always concentrate on good trade location. Then we kind of want to see some sort of indication by the market that, hey, you know what? Maybe thinking in this case down is not a bad idea. Beep, boop. What does that mean? Indicator confirmation. And what is the ideal indicator confirmation concept that we're trying to impart on you people? I'm telling you, man, I don't understand why more people in the market don't do this. Like this is absolute gold. If you can focus on this, it's just incredible how consistent this is. So what's the concept we're looking for? Way to go, Min, you got it. Ideally, we want to see divergence. And what's super cool is we actually have people in the past at TRI that have built scripts on TradingView. Geez, I mean, this guy, he should really charge money for this indicator. It's so freaking incredible. This MAB, it basically on your screen points out divergence, right? That's that indicator confirmation. Can you see how many 5 confirmed bearish divergences? We have a divergence in Willie. We have a divergence in MVI. I'm not sure what that is. MFV. I think that's I can't even read that. MME. We have a confirmed divergence in RSI, a confirmed divergence in MACD. Do you see? And, maybe I need to pull all these up for you. I mean, look at this chart. Holy Shiite Muslim. Can you not see these divergences? Which direction is MACD going here? Is this trending higher or is this trending lower? Please learn this, people. Oh my goodness. The easy way for you to know this is play connect the dots. How do you know that this thing's confirmed? When we go through the middle part of the M. Can you see that this is a divergence? Because we go up, down, up, fail. Now let's look at price. So we went up, that's here. All right, we can even get rid of all these other ones. I mean, God, we could do it in RSI, we could do it in Willie. We could do it in all these other indicators that are noted here, but we'll do the MACD just so you can understand this. I hope you can see this because, I mean, I don't understand why more people in social media don't talk about this stuff. It's remarkable remarkable. All these people that, like I literally sit and watch this YouTube shorts and shit, and you just sit and scroll through and TikTok and stuff. I don't see anybody doing this. How on earth? I mean, Chris and I, we've got to somehow get this message out on these damn shorts. Anyway, just give me some feedback here, you YouTubers that are watching this right now. I mean, I don't know how I can't make this any bigger for you. Can you see the divergence? This is, I mean, we're here to make money from trading. And really what this should tell you, how do you describe this? What you're always looking for in the marketplace is information from the market itself. Oh, excuse me. We're looking for information from the market itself. Thank you. That's going to try and help you make informed decisions. So how can we determine that price maybe is not as strong as price is leading you to believe? The one easy way for you to see this is this concept called divergence, where your indicators are heading down, but price keeps heading up. And this is absolute gold. I don't get it, how I can't seem to get this message out to the world. I don't know why. I don't know. Well, anyway, there it is. Okay, so we said that we have our cadence of how we're going to decide when and where to take a trade. We said, number one, we want to try and find trade location. Do you understand that this AB equals CD level is a valid trade location? Does anybody understand this? Anyone? All right. Then number two, we want to get information from the market that price is not as strong as price is leading you to believe. Do you understand how this concept of divergence in your indicators, and the more divergence, the better. Right? This happens to be MACD, but like we said, and that's why I love this indicator. This indicator is just fucking gold. This MAB, you just throw it right on your screen here. And when you start to see the list of confirmed divergences go through the roof, we're on to something. Do you understand this? Am I making this message clear? Maybe, and how, give me some feedback in the comments and stuff. I mean, what's fascinating is all these people on YouTube and stuff, they go, put the comments in the field down below, and there's tons of people putting comments, but nobody ever comments on my videos. I don't get it. Maybe it's because of the way I talk. I don't let you guys feel as though you're interacting with me. The only comments that I ever see on my videos are other assholes trying to shill, well, listen to Bob Smith over on WhatsApp. Here's his address. He's just the best. And then you get like 20 fucking comments of that. Oh, yeah, Bob Smith's the best, man. He sucks dick better than anybody. Oh, wait a minute. I shouldn't have said that. Anyway, I mean, I don't understand. I'm doing this social media thing completely wrong. And if anything, and I've said this to you guys before, this is probably Spirit's message to me that, Brian, you're done. You were asked to do a job 10 years ago, and I'm looking right at my wife right now. I'm talking to you, Joanne. Right? I was asked to do this job 10 years ago, and I think my job here with social media and all this stuff, it's over. Because I don't know why. Like, I'll ask you guys to put comments and stuff down in the field. Nobody watches these videos. Nobody comments. I don't know. obviously, my time is running out here. Anyway, I hope you guys are getting some good, it's remarkable how I'm literally giving you the secrets of the market here. Just please pay attention. And if you need help framing all of this, like Brian, I don't know what the fuck I'm doing. Take the education program. It's so cheap, and yet it will frame how you should behave, how you use all this information to make money from trading. So anyway, there's a shill for you. Yeah. Well, Cheryl, I mean, you're here like a boss, and it's great to see you consistently here. You're awesome. But you tell me, did the education program help you in sort of framing how you should use all this information? I hope so. Because really, the whole reason why I'm doing this is for people like you, Cheryl, and your son too. It's the whole reason why I'm doing this. I was trying to help the little guy. Um, Good. Well, there you go. It made a positive difference in your life, Cheryl. So, okay. So now, what did we say was reason number 3? We should have 3 reasons to act in the marketplace. Wow, that's interesting. Matador says around 96.6% of YouTube accounts have fewer than 10,000 subscribers, and 84% of channels have fewer than 1,000. You are in the top 10%. There you go. So quit your complaining, Brian. Oh, you're awesome. Hey, yeah, David, you know what I look like. There's nothing, there's no, that ain't gonna happen. Oh, goodness. Okay, so number 3, what's number 3? Oh, you crazy people over on YouTube. Because there's nobody here. Nobody even bothers coming into the Zoom calls with me anymore. In fact, actually, with one regular, it was just like, oh fuck, I've had enough of this. I'm out of here. And we've got one person here. I have no idea. We have somebody by the name of B in the Zoom call here. I have no idea who you are. You want to say hello to everybody, B? Probably not. It's probably Alan. Excellent, Matador. Matador says market structure. AFA says market structure. So, what do we mean by that? And really, all market structure is to try and help you frame risk. So, you remember how I did this? I mean, we've already decided that we're at a place where the market maybe should review, right? What did I say? Review. I think I was reading the YouTube. We're already at a place in the market where the market should potentially reverse. Okay. Trying to talk and read YouTube comments at the same time. Crazy. Trade location. Now we have a whole bunch of messages from the market. You know what? Odds are we're probably this market's a lot weaker than what you really think it is. And then finally, you want some sort of structure to actually frame the trade. And, my ideal structure, and of course, how ironic, if you look at the QQQs, what's the message I always tell you guys? Let's see if any of you guys can jump through this hoop. What do I always say about, let's see, maybe I'll do it over here. I think I already had it done, didn't I? Well, there it is. What do I always say? When you see something like that, do you see a happy face? See when I do that? Coke, are you a site member? If you're a site member, you can pop in the Zoom call with us. Chris posts the Zoom link every single time we do a video. Uh, mm. DDBB's posting pictures of chickens. There you go. Yeah, here was that link I posted in the lounge about Huawei insolvency. And who knows, is it just FUD? Anyway, that's what I was talking. Suppose we'll get to that if we can get to Brian's Bitcoin summary. I guess I'm trying to do just a quick tutorial here on 3 reasons to justify acting. So this is one of the market structures that we teach. Really simply put, you can use M's as a way to identify that maybe potentially trend has changed. Previously, maybe it was like higher lows and higher highs. So we're a bull market. And we start to make lower highs and lower lows. And that is confirmed on the move through the middle part of the M, or basically when the market starts smiling at you. And what is the expression that I use? And everybody should write this down and just try and remember it. What are you supposed to think when you start seeing the market smiling at you? It's pretty straightforward. It ain't rocket science. Yeah, more importantly, though, think of like that. Where's Adam? Dan cocksucking son of a bitch crook FTX promoter asshole jerk. Let's see how many other swear words I can use to describe the horrible, evil human beings that take advantage of good humans in the marketplace. What the hell is his name? Friedman. Dan fuck you Friedman. Right? This is Dan fuck you Friedman looking at you in the face. Think of it that way. Right? In fact, maybe we should just call this from now on. I think we're going to, because I got to remember this dickhead's name. We're going to call this the Dan fuck you Friedman smile. So the DFF smile. I think we're going to call it that from now on because I really want to remember it. That guy's going to be a fantastic reference. The Friedman facial. There you go. Well, the sad thing is Cheryl, I actually think that guy, number one, I think that guy's too young to have pulled off this criminal enterprise the way that it was pulled off. I think that he was the pigeon, and he was the most perfect pigeon possible. The guy everybody should be angry at is the Dan fuck you Friedman. That's the guy everybody should be angry at. And notice how he's just sort of evaporated into the background. So anyway, I just like the idea. I want to try and remember that guy. So I'm going to try and call this the DFF smile from now on. All right. So the point here. Hello. Hey, now you're on the over here. Way to go. You want to, hey, you got a microphone? You want to say hello to everybody? Feel free. No. All right. Well, anyway, Coke jumped over into the hangout here, and now he's actually with us in the Zoom call. Way to go. All right. So here is a really good example of market structure. And, the interesting thing is you can make, oh, hello. Oh, he's about to say something. Oh, you were so close. Try again. One more time. I'm scared. All right. You don't need a bullseye on your head. Brian's already got a bullseye on his head, so we'll just leave it at one. That's fine. You don't have to say anything.
No, I'm here. I'm here.
Hey, there he is. Hey, hello. Welcome.
Welcome.
All right. Now shut the fuck up and put yourself on mute. Just kidding. All right. So that's the smile is one form of market structure. Outside downside key reversals are another form of market structure. You could also use things like candlestick patterns. Like, let's see if we'll ask everybody on YouTube to jump through a hoop. What do we call this 3-bar pattern right here? Boom, boom, and boom. Bang, bang, and bang. What do we call that? This is also a form of market structure. Now, I'm not necessarily saying that you have indicator confirmation. I'm not saying you have trade location. I'm just highlighting a market structure. Fractal, and for those that want to use sort of an American sort of acronym for this, is also called an empire pattern in the United States, because it kind of looks like an Empire States Building. So, and if you had shorted there, boom, 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 down we go, whatever. So the point here is that there are a number of different ways to identify market structure, and that just so happens to be one. And what a surprise, at exact same moment that you get big fat outside downside key reversals, you also get other markets that are spitting up that type of market structure. And you might argue here, we might even do something, maybe even the chaos theory works best here. Let's see what happens if we do fog and bombs up top here. Oh, hello. So now that's interesting, because of course NASDAQ was the one who led the charge here. So what a surprise. Of course, bizarre how it does. Oh, you know what? It's over here. Notice how 4.669, look at that. That's basically the top of the market. So if you're a fan of chaos theory and you traded that double bottom, suppose there was also another double bottom that came in there. I don't know whether we'd use that one or not, though. Sure do like the look of this one, because actually that looks like it's even a little bit lower, isn't it? Yeah, let's do that. There to there, and there to there. So there's your 4669 off of that level. So that's interesting. We could also do, like we said earlier, the AB equals CDs here. So you could probably go like A to B. And this looks to me like, and this gets a little bit more difficult, but this looks to me like what's called an alt AB equals CD. So this move up to here, we will do extension study. And alt ABCDs go 127 to 1.618. And notice the 4669 lines up nicely with that 1.618 as also another reversal level. So this actually is a valid alt AB equals CD. I guess we'll do it like this, PRZ. And, if you want, the great part about TRI is we have just this killer library. The library itself, I've actually had people in the past say that the library itself, this library is so full of information. This library in itself, like we have a harmonics pattern cheat sheet right in here. Yeah, I've actually had people say that the library itself is actually worth the price of the basic subscription. But what I wanted to show you was AB equals CD. There is the alt AB equals CD. So in fact, actually here, let's even zoom in and we'll do even a better picture. Right? So we can go like that. Whoop. What do I want to do? I want to go like that, and we'll go like that, and we'll go like that. Maybe just for fun, let's go here. And let's go here, and then let's go move this over here, and like so, and we'll go like so, and like so, and like so, and copy, and put that away, and then we will go back to our price chart, wherever the hell that is, and I'm wasting too much time. Anyway. There, boom. All right, so not a bad trade location, 1.618 right there. So I think you can make the argument we have trade location of 4669 off of the original double bottom, fog and bomb constant, and probably also too, Oh, what a surprise. If we actually look at the original range, what do you think the odds are? This is like 78.6 or 88.6 or something like that. So all you level oneers who is watching this video right now, you should just, and actually every TRIer, right? You should look at this and go, oh, gee whiz, who can tell me what do we call, actually there's a couple names of it, but what's the most recent name that I've given this 78.6 level? Just because it is. What do I call this? BFF. I'll even give you the acronym that I use. Right? It stands for Brian's favorite fib. And I mean, look at that. Is that not the definition of trade location? Fuck me. There's three completely unrelated reasons to justify looking for a pivot at this level. Isn't that incredible? That's stunning to me. And now, okay, so we got trade location. Looks like this is a pretty good idea. Now, are we starting to get indicator confirmation? How many confirmed divergences do you see on this push up top here? MFI, MMF, SQM. I have no idea what the SQM is. Let's, whoops, what the heck did I just do there? Where did the indicators go? Looks like I got rid of one. Let's go back and do that. There we go. Oh my goodness. Look at this OBV breaking down here. Remember I was saying earlier about the bulls and the bears? Where the hell are the bulls? Look how they're just vanishing here. And the bears are starting to pick up. And look at this OBV. I mean, I think you can make the argument. I'm actually a bit surprised why the indicator didn't show this, but that to me, what's this high here? That high is 71.139. And nope, I'm looking at the wrong number. Sorry, let's try that again. 56,985, 56,985, 56,944. That's a lower high. It's actually interesting. The MAB did not pick up this OBV div, which is huge. Huge div there. Just monstrous. Look at the MACD div. Oh my goodness. Holy breakdowns, Batman. This thing's been in divergence forever. Oh goodness. This is enough to give you a heartburn. And of course, Willie's nice and stupid. So you tell me, Cheryl, you should be getting good at this now. Do we have indicator confirmation that this thing looks like it's topping out? Anyone? So anybody help Cheryl? Thank you, Cheryl. I think you already knew the answer, but nonetheless. The point here is lots and lots of indicator confirmation that this thing was getting exhausted. And now finally, in this particular case, right, the coup de grace, icing on the cake, what are you supposed to think if you see Dan fuck you Friedman smiling at you? This is, I don't know what SNP is. This is QQQs. So this is the NASDAQ. And I mean, does it make sense with this kind of image? If we pull up this image here, look at that carnage. Holy bejesus. So, interestingly enough, everything that we said before about, can you see the market smiling at you here? This is where it gets really tricky, of course, trading stocks, because, of course, they can gap lower. But do you see how it looks to me like this thing actually gave you the trade entry before the gap lower even happened? Look at that, folks. Fuck. God damn, Dan, fuck you, Friedman. Look at that. And of course, we better label this video. This video is not for children. But look at that, folks. Can you see how this market actually told you to actually sell it before this event happened? Do you see that? Can you learn from this? This is the whole reason why I'm doing these videos. It's the whole damn reason. Well, no, I mean, it'd be interesting to go out and poll how many people in the public actually are short. And I bet not many. I'm not going to say this is easy. I'm not going to say this is easy at all. This is not an easy game to play, folks. But what you have to understand, I mean, you've got to learn this, is there are sort of indications that markets have just gone too far. And if you can understand that AB equals CD concept, I mean, maybe you learn the bot's sort of the way to trade this. But even if you can just learn, because keep in mind, like we said earlier, well, actually, I didn't, but the bot is like a bastardization of this harmonic. But what I really need for you to see, especially coming out of today's broadcast, is if we do things like the extension studies, right? So A to B, C to D, this would be your basic A to B, C to D. So there to there. It's just trend continuation, really, really simple stuff. And actually, I got to keep moving forward here. Boom, 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 boom. And, interestingly enough, the alt A, B, C, D failure levels are 127 and 1.618. So in this particular case, oh my goodness, can you see this, folks? This is ridiculous. See that 1.618 level? And look at what this damn thing did. I mean, do you see this? Am I hallucinating? Look at that. That's insane. Was that, and actually I even put out a tweet the other day about sort of price action, where when you see this as a technician, you kind of go, it's almost like this level could not be hit. It like it had to be hit. And then like literally as soon as it was hit, that's it. Rally's over. No, lights out. Well, very good, Coke. Coke. I'm assuming that's the beverage and not the the stuff that you yeah, whatever. There are tons of signals here. As you pointed out, Coke. Well, I mean, couldn't you say that peak there, then sell off to that low there, then counter trend rally to that low there, or that high there? Isn't that an M? Couldn't you have shorted that level? Absolutely. Okay. Yeah, you're a very naughty boy. All right. And this gets into, can you see this smile within the smiles? And man, if you ever get smiles within smiles, oh my goodness. Look at that. Take a screenshot of that, folks. And what's incredible about this is you can't even say that you were frozen out of this trade. Actually, I think any of us could have done this trade, no problem. All you had to do, of course, is have your plan in place, clearly identify what's going to get you to act, and then act. That's the hard part of this. Sadly, of course, looking back in hindsight, this is the easy part going, oh, geez, look how easy that top would have been. Easier said than done. So, trying to understand why the NASDAQ is breaking down, why the S&P is putting in outside downside reversals. Well, again, this is actually a perfectly legitimate, in this particular case, we would call this the, oops. Which one is it? A, B, C, D. I thought I had it written up here. Anyway. Oh, no, that's not what I want. No, I'm looking at the wrong damn thing. This line here. There we are. That is a perfectly legit potential reversal zone. Okay, do we want to go over and look at Bitcoin now? Uh-oh. Dun dun dun. All right, you're a sweetheart. Thanks, man. Back to our write-up here. There was a whole bunch sort of like what are the reasons why? I mean, I think you can make the argument that the breadth indicator was giving us a lot of warning signs there all through the month of July. So I don't think it should surprise us that indeed what happened in the market. I think Apple here, I just walked you through. There were actually a lot of reasons to look for a top in Apple right there. And what you're seeing here, believe it or not, this isn't shocking in my eyes at all. It is interesting that when we look at something like an Apple right now, you might argue, like how many people are going to now, first thing Monday morning, of course, Monday's a holiday, so who knows what the fuck is going to happen here. And it might just be a local civic holiday. I don't even know. The US markets are probably open, but it'll be a thin on trading. But watch what happens if we do fog and bombs going to the downside now. So if we go there to there, and then we go chaos. Can you see how this stock is probably going to gap open first thing Monday morning as all the retail all freak out because they've seen what's happened on the weekend. There's going to be a ton of sell orders. It's going to gap lower. And my hunch is it probably actually starts to rally following that. So anybody who actually sells down here, they're going to get absolutely screwed. I mean, that is so typical Wall Street. So for heaven's sakes, don't get all wrapped up in the bearish euphoria of this gapping lower. They got everybody on the run here. They're probably going to encourage retail to come out and sell hard here, and it's probably a trap. Now, the interesting thing, and this will be a good assignment for you, is just to watch how price acts. If we actually start to get bearish structure come in here, another M or something here, and we start failing through these levels, then you know where our next stop is. And the interesting thing about this is, remember what we talked about earlier. If we do simple things like what's a 38.2 fib retracement, let's just even use this recent range. We don't have to, we could use the whole range. But just for the purposes of this conversation, let's just use this range. Notice 877 is right against this low, but let's look at where things like reload zones and 38.2s are. So in a weird sort of way, remember we had said earlier, I wouldn't be surprised if we gap lower here, probably going to bang into 38.2s. And this might not be a straight line, right? This might be, because there's going to be a lot of people sort of, position squaring and stuff. This might be really messy, right? Where we actually create bullish divergences as we work our way back up. I could very easily see something along these lines, but lo and behold, there's our 38.2. Big old honking gaps that need to be filled into the downside. So we could definitely see that get filled in. Colin's pump chaser zone for all you Colin fans out there. You can clearly see there is Colin and his buddies. And, if this thing really starts to puke out, look at the size of that gap right in there. Like, I don't think that gets filled in until the fall, but I wouldn't be surprised if we do something like this over that August period. And, the rest of the NASDAQ completes its technical correction. S&P's complete its technical correction. And then, ironically enough, just as everybody's all bearish and we start to hear everybody in public get all bearish, what's this thing going to probably do? Then it's going to start what they call climbing the wall of worry. And what bothers me is that there are still some upside objectives that, remember we saw in the Dow, for example, there are some objectives that still haven't been hit. Yeah, so I could very easily see this thing, once they've got everybody thinking bear, then they actually take it up and then top it out into 4669s. Can easily see that. So, of course, like I said earlier, they ain't going to make this easy. But I definitely think that there was a short setup. I didn't necessarily want a short. In fact, I would consider pullbacks buying opportunities. So something like this, if you really wanted to be in Apple, actually, here, maybe I just leave that. I would say, maybe just keep an eye. Actually, this would be a good dovetail. Is I was passing around this site, and we had actually a really cool technical setup. You want to see an asset that I might be interested in buying right now? Is this LEG? Now, notice, does that look anything at all like the Apple chart? Or does that kind of look almost the exact opposite to the Apple chart? Do you see how I'm buying against the bottom ends of ranges here? So also too, did we mention outside upside key reversals? It's kind of an important signal. So look at this huge outside upside reversal that's trying to come in. It hasn't confirmed yet. And of course, if the stock market melts down, this signal won't come in. But if this thing can get its butt back above that high, that not only becomes a big honking W, but it's also an outside upside key reversal. Talk about confluence. And then we can start thinking about like fog and boggies, the exact opposite of what I just did in Apple and QQQs and all that kind of stuff. And so that's going to paint upside targets here and here. And then also, we can do things like fibs going the other direction. And where would Colin and his dump chasers be? They are probably right up in this area. All right. Notice, what a surprise, 4.669 lines up nicely with 38.2. So, this is a name that I'd actually be interested in. And I did quite a write-up on this for our spread trading group and our sort of secret options formula group. That's what we call it on the site. I'll just briefly show you it. I won't go into too much detail here. But I definitely think this is an idea that's caught my attention. The question, and I was wondering whether I should actually tweet this out publicly or whether I should just keep this in-house because it is a proprietary signal. And, guys want to encourage people to actually subscribe. But here's the whole trade setup. There's the key reversal signal. Here is your 3 reasons for a trade. We've got location. This is 78.6 off of the entire range. We've got indicator confirmation, 5 different bull divs. We've got price structure, big W's. We've got outside upside key reversals. And then interestingly enough, for fun, I said, okay, well, let's do some fundamental analysis on this. And this is Ben Graham's sort of intelligent investor, what Warren Buffett learned a million years ago. How do you actually define intrinsic value on a stock? And he has a formula. And you can go through and plug in all the numbers. And according to my valuations, turns out this thing's got a fair value of about $28. Well, what a surprise. Here we are sitting, $29, or basically $1 off that level. Now, why on earth is somebody blitzing me with PMs right now? They know that I'm on air. So whoever it is, please stop messaging me. It's very frustrating. So point here, well, they just keep going. So point here is there's actually a million different ways you can trade this. And this is one of the best parts of TRI in the education program. Do you want to just go and buy the stock? Do you want to go and buy a call option? Do you want to go and buy a bull call spread? Do you want to go and write a put option and see if you can get exercise on the put right and buy the stock cheaper? Do you want to write the put option, get exercise, carry the stock on margin? You will collect the dividend, which is a ridiculously high dividend on this thing. Point here is there's a number of different ways that you can trade this. So you're not just limited to just, I'll just go buy the stock. And, as you can see in our upcoming Tuesday meeting, actually, I wouldn't mind going through with the gang all the various different ways to play this. So it's such an interesting analogy. And of course, this is the last business in the world anybody's interested in. So it just goes to show that, when QQQs were spitting up buy signals back here, of course, nobody was interested, right? And I think I told you, we had the most insane buy signal that came in on things like the NASDAQ 100 here. And while this signal came in, it was impossible to tell anybody to buy this thing. Nobody was interested at all. And look at the end result. And I actually think that's exactly what's happening with this leg. And that's just the way the trading world goes. Okay, so we talked a little bit about how dangerous Apple is here and, what's going to happen. If anything, this is a really good lesson. There's lots of reasons to justify a trade here. Lots of 3 unrelated reasons. You can obviously, because this is a market darling, you can see this in the S&P. You can see it in the QQQs. It's also a really good example of how when one stock represents too much of an index, it can actually destroy the stock market when that one stock starts falling apart. Anyway, we'll see what happens. Let's head on over and spend the rest of our time here talking crypto. As I had said in the write-up, there's a bunch of stuff going on in the underlying crypto market that's a little bit concerning. Things like big hacks. Of course, that's going to, obviously, people who lost money, they're not going to be happy about that. But it's also going to, maybe I shouldn't touch this stuff kind of thing. Got Richard Hart, of course, under the SEC crosshairs. And now we've got a whole bunch more sort of Bitcoin FUD that we have to worry about. 64,000 foot view, 100,000 foot view. I don't know, whatever you call it. I always like to start any analysis. I'm going to look at any asset with what's a look at the weekly chart. Weekly chart always tells you everything. When was the last time Bitcoin put in a weekly W? It was back here, buy when it snows, typical seasonal trade. And of course, the W came in shortly after Dan fuck you Friedman, right? Screwed over all of us with his FTX crookery. And of course, SBF as his scapegoat, as his pigeon, took the fall for him. And, just because you're a pigeon, that doesn't make you unculpable. I mean, he's just as guilty as Dan fuck you Friedman. The only problem is Dan fuck you Friedman is probably going to get off completely scot-free, which is pathetic. Anyway, it's just the way this stupid capitalist system works. And there's more messages. This person has got a major hard-on with messaging me. Kind of dumb that they're doing it right now. All right, so market worked its way up. Buy when it snows, sell when it goes. Nothing out of the ordinary here. And the problem is that once we get into the sell when it goes scenario, this unfortunately is when the public is actually feeling liquid. We've had economic expansion through the winter. Of course, people get their tax refunds. So they're feeling liquid and they want to participate and they want to play. And all I see is a trading range that's been established. Interestingly enough, I really would have honestly thought that we had to push up into these levels. This inverted head and shoulders is still active, painting that 200% parking garage target. There's 38.2 off of the entire range of Bitcoin from its all-time high. I really honestly would have expected us to trade up to that level. So I don't necessarily think that the bull is done, right? The moving averages, a great way to sort of frame what is the trend. They're still pointed bullishly. The fast red moving average is above the slower teal moving average. So we're still technically bullish. It's just we have no price structure to work with. We've got a V bottom here off of that Larry Fink guy. Hey, I want a Bitcoin ETF. All of a sudden, the market just rallies out of nowhere. And now following that event, we're just seeing the market slowly melt its way back down. All I can say here right now, 38.2 is first stop targets. That's the bottom end of your range. We have a shooting star here. This is not an inverted hammer. Social media, please get your candlestick references correct. shooting star here. That is the top end of your range. And oh, what a surprise. Look where the shooting star, after what we just said about Apple, look where the shooting star came in there. Isn't that incredible? My goodness. So, is it worth your while to pay attention to the golden ratio? That's what 1.618 is called in mathematics. I'd say so. What this image looks to me like is this image looks like a big fractal. Which means if this is a fractal, we should come back down against these lows, against this trend line support. And then we should rally back up and test these highs and probably trade back to that high there. That's what this looks like to me. Now, obviously, just because Brian's opinion is that doesn't mean that's what's going to happen. But that's what it looks like, is this is some big honking fractal. Of course, too, we have the U.S. regulators. So, basically at war, Gensler at war. We've got that old fuddy-duddy who's in the White House who absolutely hates crypto with a passion. And would prefer all of us just get union jobs and just punch a clock and do what we're told and let them just continue on with the fucking crookery. And I gotta say, I've lost a lot of respect for the Democrat Party since he's been in power. I never really had that much respect for them before, but man, I can't believe how corrupt these federal politicians are. It's stunning. I mean, don't get me started on fucking substitute drama teachers, eh? Oh, goodness. And now the guy's actually coming out and publicly saying that it turns out that he had a mistress and he was cheating on his wife the whole time. Hey, there's a good moral compass for you. I can't believe how many people are so fucking... They're just these human species. I'm almost disappointed that I got the opportunity to come into this universe and experience the universe, but I was cursed being put into this human existence. I can't believe how evil this species is. The longer I live, it's just nasty. Anyway, that's another conversation. So, I don't see Bitcoin going anywhere in a hurry here. We banged up against the 13 EMA. Hopefully you can understand why I like the 13 EMA as much as I do, because this thing has just basically been a magnet for price here recently. And we're just parked here. And, I still think that the downside, this shooting star, its objective should be this arrow here. And actually, when you drill down to the daily time frame, which is this chart, that's actually like a railroad tracks. And it's the same thing. This is basically a trading range. And if we lose the bottom of the trading range, we should just replicate that range to the downside, which is basically the same thing as that shooting star objective. And we're just sort of we're not doing anything here. And this has been actually pretty torturous, because this is what in Traderland, this is what they call a narrow sideways channel. And you can see how they head fake. Well, we're going to break the market out to the upside, and then they bring it right back down. They're going to head fake that they're going to take it down to the downside, and then they bring it right back, and then they've just got it parked in this trading range. I would say off the daily charts, another reason why I'm still as bearish as I am, the moving averages, that moving average relationship on the daily charts is pointing down. And I think I saw somebody say over on social media, I've seen this a few times, so you're not alone in referencing this. There are a lot of bearish divergences. Oh, I screwed that up. Oh, darn it, where'd it go? So, nope. Oh, darn it. Way to go, Brian. There are a lot of divergences that are showing up on things like momentum indicators here on the weekly price chart. We just have a simple rule around TRI. When you see bearish divergence, right? And this one, I don't think this is actually confirmed yet, right? It will confirm like, oh boy, run for the hills, because this will be a move through the 50 line too. Uh-oh. Any of you who have studied RSI with me over the years knows that when this thing breaks through the 50 line on structure, oh boy, all hell's going to break loose. So if this thing actually does come down and go through this 50 line, not only is it going to be on a divergence, we made a higher high here, but that's going to be a huge RSI sell signal unto itself, which is pretty dangerous. As well, too, you can also see that the MACD histogram is in huge divergence here. So there's where the divergence in the MACD histogram fired on this move down here. All of this rally, Larry Fink's rally here, this is all Larry Fink's rally. On momentum, this is nothing. Nothing happened here. This is just bullshit. If anything, this is, oh boy. So whoever made mention there on the YouTube chat earlier, I heard you, I just saw out of the corner of my eye, you're going, what about the divergences on the weekly chart? And you're absolutely right. We just, who can fill in the blank here? I know there's a few OGers over there on the YouTube. When you see a bearish momentum divergence confirmed on a price chart, if you are a bearish momentum divergence is confirmed, if you are a bull, what should you do? And this confirmed right through here. What should you do if you see this confirmed bearish momentum divergence? There it is. It confirmed right over here, through here. What should you do? Very good, Matador. Very good look. They outdo the last all-time high. All right. Very good, Adam. I mean, learn this, people. This technically is a very unhealthy market. Now, maybe we can go and put in a W here on this histogram, right? Maybe we go down, up, down, breakout. We do not make a new low. And if that's the case and this W comes in, then you go, great. It looks like we're back in business. But notice like the breakdown in MACD came over here, which is over here. My hunch is if this thing actually is a bull, right? We come down against all this trend line support. We put in W's and you're going to find that the buy signal actually is just about exactly the same level as the sell signal. That's usually what happens here, folks. So anyway, point of the matter here is huge bear div in these momentum indicators. And, if anything, this is really simple for you. If we can somehow hold in here, right, and the moving averages act as support and we start Wing out and these indicators start Wing out, then great, everything's fine. We go back into the bull. But if we don't and we start to puke out and we start to dump and we can't hold these lows and this M confirms, that's a run for the fucking hills signal, folks. Does that make sense what I just said there? Give me some feedback here on YouTube and write in the comments, please. Do you understand what I just said there? Because this is critical. And if anything, my little RSI study, right? There's the first M. We usually color that like what? Teal. And then this would be the second M when we color that yellow. And we said that if we get an M, a yellow M, which is the second M, through the 50 line, that becomes an absolutely monstrous signal. I sure hope you all heard me. Give me some feedback. Did you hear what I just said there? Please. Anybody? What time is it? I got 5 minutes left here, folks. Good. All right, so somebody says, well, but isn't that daily chart spitting up a whole bunch of, what the hell have I done here? I don't know how to do a price chart, but I don't know how I have to work these damn fucking charting platforms. All right, let's put all this back the way it was. Oh, gee whiz, here's another. Oh, man, look at that. Is that not the icing on the cake? We've got a bear momentum divergence in MACD, and what is Willie doing there? Willie is officially what? Oh, goodness. You can't write better fiction than reality, I swear. This is actually setting up a weekly trade setup, folks. If we get like any kind of market structure signal, we have location, right? We hit 1.618. You've all seen that anymore, or you all saw that, right? We've got indicator confirmation. We have a confirmed divergence, and we've got Willie Stupid. So if I get any kind of market structure signal, that becomes a sell signal. All right. So let's go to the daily chart. So we said that the moving average system is actually pointing down. We said that the railroad tracks, and remember that was a shooting star on the weekly charts, that's pointing down. I think actually we have an active trend channel here, and I think this channel is perfectly valid. I think the channel downtrend line is actually acting as support right now. So you can see that if we puke out here, there's no moving average. The moving average support is all the way down here. There's the 200 period moving average on the daily chart. 13 EMA, 30 SMA are actually resistance now to the upside. And notice, look how the market rallied into those moving averages and was rejected. So I guess the first question that I would have for you, if we go through that three-step process, do we have a good trade location right now? I don't think so. Ideally, if I was thinking trade location, remember I had said earlier off the higher time frames, I think this is a big fractal, maybe a head and shoulders pattern. And if that's the case, then trade location should be somewhere down here, right? In our reload zone. And I wouldn't even be surprised, given it's crypto, that 88.6, remember we call 88.6, 78.6 to 88.6, where the hell is that? I think that's right there. This is our venture cap reload zone. Now, I'm going to say acceptable trade location is at or below reload zones. So I don't think this is a good trade location. I really don't. I think acceptable trade location starts down here. And it's interesting, you can see how I have first stop target written right here. There is 38.2. This was Larry Fink's, hey, I want a Bitcoin ETF bullshit low. V bottoms should be tested with candle body highs and lows for trade location. Love that level down in there. So I don't think this is a good trade location. I see a whole bunch of bullish divergence in momentum indicators, and that's cool, but I just don't have trade location. Now, if this is the bottom, then what I need to see here is I need to start seeing some bullish market structure. So maybe, just maybe, if we're lucky, this is actually a bot setup, which means 33% has to be traded to, but no more than 66. And this would imply trend continuation. And that's okay. There's nothing wrong with that. Market will do whatever the hell it damn well wants. Question is, how do we trade it? So what that would imply is this was nothing more than like Collins' pump chaser zone. So if we go pump chaser zone, 38.2 to 50%, you can see how we stab down into this area. So this could be acceptable trade location for a trend continuation trade, AB equals CD, to take us up top. But if that's the case, then what I really need to see is, and let's see if any of you can jump through the hoops. If I'm going to bullish bot this here, how many lows do I need to see consecutively, higher lows? Keep in mind, that just made a new lower low there. How many lows do I need to see that, okay, I'm willing to step in and take the chance here? The answer is I need to see 3 higher lows. So if this is a bullish bot, one low in itself is not enough. And what I really need to see, think LJ. I know a lot of you guys in social media are super excited about LJ setups. We have one guy on this site, I think his name's Nick, and he just trades LJs every single day in the stock market like a freaking boss. It is so cool to see him trade those every single day. He's in there and they work. But the point here is LJ just simply says, there is your downtrend. Now we need to see what letter of the alphabet on the other side of this trend line. There's the downtrend line. What letter of the alphabet do we need to see on the other side of this trend line? Maybe I'll make this yellow so you can actually see it, right? There's the trend line. What letter? Excellent. So can you see that if this is a bull, and like you said, you guys are pointing out there's a bunch of divs here. And remember, we said for the weekly sell signal to come in, we got to see this thing crap out big time, right? Because we got to see this W in RSI fire through the 50 line. We got to see the market punch through all this trend line support and stuff. And I don't think that that's going to happen right away. So if this scenario does not happen and we just go, because we got one low, if we go second low, test that low, but don't break through it, then we get another low. Can you see the one low, two lows, three lows? That Beamish guy can now actually start thinking bullishly again. Does that make sense? Hope you guys can understand this. So maybe this is still a bull. As we had said earlier, the weekly charts are still pointing up. And we still have some targets to the upside. And I don't have enough to actually justify a trade here. Yes, we have enough to cool our jets. You better just cool your jets through all this. And does it make sense that if we start to get W's forming here, then that's going to force these momentum indicators to turn back up? Maybe we even get some buying coming in here. That would be a treat, wouldn't it? And that's a lot of ifs. You can see how much work we're going to have to do here. My hunch is next weekend, we're still going to be having this same conversation. Right now, we are stuck in this narrow sideways channel. Now, if we can resolve through the channel to the upside, then rock and roll, we got something to work with. But that's a really, really big if right now. And that's about as far as I can take this conversation. Because honestly, what bothers me here is that, what I've actually told people on this site, I suppose, and I also tweeted it out. So let's finish off with this. And it's after 1 o'clock, so I got to get going here. But this is what I think is actually going on with price right now. It's just a big hurry up and do nothing. This is what's called a diamond pattern. And a lot of new traders get ripped apart with diamonds. And just as we had said earlier, if we can somehow get some big honking W, 3 higher lows to come in, whatever the lows look like, okay, maybe we got the bull. But we got to see this happen before we can start barking bull. And then conversely, like we said, we could actually see this diamond resolve to the downside. And keep in mind, we still have bearish bot objectives, right? We still have the railroad tracks off the daily charts. We still have the shooting star off the weekly charts, and they're all pointing down into here. So this is a very, very dangerous market state. And kind of like how that daily chart said, well, you probably should just, or I guess the weekly chart said, you probably should just be cooling your jets through this. Frankly speaking, that's not such a bad idea. Now, yes, I do have the algo running. And yes, the algo wants me to be a buyer here. I've thrown the order in. We'll see if we get filled. I'm going to head off and have my afternoon with Liam. But I don't have any bullish, quote unquote, setups here. on these price charts. You know how ugly, excuse me, you know how ugly I see the stock market, but keep in mind, we've got a weird holiday screwy session tomorrow. So you might actually find that Bitcoin actually catches a bit of bid. And then when we actually get back to the regular adults trading again, this whole damn thing rolls over, and then the stock market, the regular price action takes over there. But right now, just simply put, weekly chart, we're kind of in no man's land right now. Like if I was hunting trade setups right now, I'd say there isn't one. We're not against the top end of the range. We're not against the bottom end of the range. We're getting indicator information that we should just cool our jets. And frankly speaking, that's about the absolute best message I can tell all of you. You know, if you want to wait for like lower time frame levels, I trade through 30 Gs, which makes sense, big psychological level. So 30 Gs, I think if you see closes above 30, then that's going to start telling you that things like daily charts, we're breaking out through the top ends of trading ranges, and we can start thinking bullish bots to take us up top. You can see that sort of diamond pattern with these two big candles here. If we trade down through this low, which is, what is that, 28.6, 28.5, somewhere in that area, then I think the trend continuation trade, which I think is actually what's active right now, it continues doing its thing. And probably between now and when the adults actually come back to work on Tuesday, we could very easily bang around in this, what, $1,000, $1,500 price range. No problem at all. All right, so there's your Bitcoin summary. Rah, rah, rah. Lots of FUD going on in the space, whether it be regulators, whether it be Tether, whether it be Huobi going under, whether it be hacks. So I can understand why the altcoin market is kind of meh, because I can understand a lot of people probably don't want to take huge chances in this kind of environment. If you are going to be playing markets, it looks like we're getting a bit of a bid coming in on alts. So that's kind of cool. You know, just the same old, same old. Hunt your W's, add half decent trade locations, throw on your indicator tools like this map to identify divergence. And then, of course, have fun with your the meme coins. How's that SHIB doing? You know, I think, you know, this, if anything, is a fantastic analogy of momentum trading. There's no value here whatsoever. It's pure momentum. And, you know, I mean, kids sitting in mom's basement, they got nothing better to do. They say, well, you know, that Beamish guy says that if this thing W's, you should buy. Well, you can see all the W's that just keep coming in here, and, you know, they're bidding the damn thing up. So, you know, caveat emptor. My meme coin is this Cominu. Terrible name. And I look at that really, and actually I would not be buying that right there at all. So I don't even think there's even much to do there. So slow and steady wins the race. If anything, it's a good sign to see we got a bit of green on the screen. It is this funny holiday weekend environment, so have fun, but just be forewarned, right? As soon as the adults come back from this another Hallmark holiday they've made up here now for August, don't be surprised if there's a bit of back and forth in the market again. So anyway, okay, we're 10 minutes past the hour. I really got to get going. You all know, yeah, well, yeah, I would turn on the super chat, but unfortunately, and if there's anybody who's on the team who is responsible for that super chat, you know who I'm talking about. Hint, hint, hint. Please, let's get that set up again, and let's give these people the ability to help TRI with super chats. All right. Thank you very much for best wishes with Liam. Now I go to my real job. And, you know, I've told you guys repeatedly that when you do give a karmic best wishes to Liam, we seem to have a good afternoon. So that's where my attention lies for the next 4 or 5 hours, is trying to give this boy the absolute best. He loves his car ride, so I'm Captain Car Ride for the next 5 hours. All right, everybody, all the best. Of course, we'll pick this up tomorrow. Any lingering questions that you may have seen that I didn't get to, can somebody just please transfer those questions into the Q&A document if there were questions in the YouTube chat that I wasn't able to get to? I mean, I was full of piss and vinegar today. I hope I was some sort of positivity for you guys. I gave you some information that you can work with. I mean, clearly, well, blah, 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 blah. Have yourselves a great day. Hugs and kisses. Thank you very much for all the best wishes. Have yourselves a great, awesome rest of your afternoon. All the best, and bye for now.